Welcome back, everyone, to another episode of the Forex Daily News and Updates podcast, where we break down the major moves in the currency markets and prepare you for the week ahead. I'm your host, FX Videos, and whether you're a seasoned trader or just starting out, this podcast is your one-stop shop for actionable insights, without any fluff. So, let's dive right in. Alright, let's rewind and take a look at the standout moments from this past week. The US dollar showed resilience once again, as December's economic data continued to reflect a robust economy. Despite softer factory orders, the strong labor market and steady wage growth kept the greenback supported against most major pairs. In Europe, the euro faced headwinds. Inflation in the Eurozone came in slightly below expectations, adding pressure on the European Central Bank as they continue to evaluate their monetary policy stance. The euro to US dollar pair dipped below the key 1.0850 level midweek before finding some support around 1.0800. Across the pond, the British pound took a hit. A contraction in UK manufacturing PMI, coupled with dovish remarks from the Bank of England, pushed pound sterling to US dollar closer to the 1.2500 level. For traders holding long positions, it was a week of pain. Turning to the Asia-Pacific, the Japanese yen strengthened as risk-off sentiment crept into markets late in the week. The Bank of Japan's decision to maintain its ultra-loose monetary policy hasn't stopped investors from speculating about potential adjustments down the line. US dollar to Japanese yen pulled back sharply from 135.50 to 133.80, and all eyes remain on the yen heading into next week. Meanwhile, the Australian and New Zealand dollars both struggled, weighed down by declining commodity prices and worries about slowing growth in China. Australian dollar to US dollar dipped below 0.6700, while NZD/USD tested support around 0.6200. The Chinese yuan also weakened as disappointing trade data revealed just how much the global slowdown is affecting their economy. Now, let's look ahead. What's on the radar for next week that could shake up the currency markets? US inflation data. Top of the list is the Consumer Price Index report due on Wednesday. Inflation has been cooling in recent months, but the Fed isn't letting its guard down. A hotter-than-expected print could reignite speculation about further rate hikes, which would likely give the dollar another boost. Conversely, a miss could provide relief for risk assets and weigh on the greenback. ECB meeting minutes. On Thursday, the European Central Bank will release minutes from its latest meeting. Traders will be looking for clues about how policymakers are balancing growth concerns with the fight against inflation. Any hawkish signals could lift the euro, while dovish commentary may see it struggle further. China's GDP data. China's Q4 GDP numbers are set to drop early in the week. If the data points to slower than expected growth, expect risk-sensitive currencies like the Aussie and Kiwi to face renewed selling pressure. Bank of Japan policy speculation. The Bank of Japan will meet again, and even though they've maintained their current stance, markets are increasingly on edge about any surprise moves. Any shift, however minor, could trigger volatility in yen pairs across the board. Let's talk charts. What are some critical levels and strategies for traders to consider next week? Euro to US dollar. The euro's bounce off 1.0800 looks fragile. A break below that level could open the door to 1.0700. On the upside, watch resistance at 1.0900, a push above could see momentum traders jump in. Pound sterling to US dollar, the pound's trend remains bearish. Keep an eye on 1.2500 as a key support level. If that breaks, we could see a move towards 1.2400. Resistance sits around 1.2650. US dollar to Japanese yen, with all the uncertainty around the Bank of Japan, this pair could see wild swings. Support lies near 133.50, while resistance at 135.50 will be tough to crack unless we get strong US data. Australian dollar to US dollar. the Aussie's recent slide puts 0.6670 in focus as a key support. A break below could target 0.6600. Resistance at 0.6780 needs to be cleared for the bulls to regain control. Gold, XAU/USD gold prices have been flirting with the $1,920 mark. A stronger dollar could push gold lower towards $1,900, while weaker US data might see it challenge $1,950. Before we wrap up, here are a few practical tips for navigating the week ahead. 1. Stay data-driven, don't trade on emotion. Whether it's inflation data or central bank commentary, let the numbers guide your strategy. 2. Manage risk, with so many potential catalysts, volatility is likely. Use stop-loss orders to protect your positions and avoid over-leveraging. 3. Diversify your focus, don't get tunnel vision on one pair. Keep an eye on correlations between currencies, commodities, and equities. 4. Stay updated, events can shift sentiment in an instant. Make it a habit to check the news and adjust your trades accordingly. Alright, folks, that's a wrap for this week's episode of the Forex Weekly Insider Podcast. I hope you found these insights valuable and that you're feeling prepared for the week ahead. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with your trading friends. Your support keeps this show going. Remember, trading isn't about predicting the future, it's about preparing for it. Until next time, trade smart, stay disciplined, and we'll catch you back here next week.